Hello traders, Gary Wagner here. It is 12:20 in Honolulu, 6:20 in New York on Monday, 5th day of August 2024, and this is the evening report for gold and silver. Investors globally continued to react to Friday's unemployment component of the jobs report, showing that the unemployment rate in the U.S. had ticked up to 4.3%, triggering alarm of a potential recession. This led to the S&P declining by 3%, the Dow Jones Industrial Average dropping more than 1,000 points, and the Nasdaq Composite sliding by 3.4%. In terms of gold, gold dropped by about $85 from the intraday high to the intraday low, opening today at $2,490 and plummeting to $2,403.80 before recovering to finish lower by $34, settling at $2,452.10. Currently, gold is trading in Australia down approximately 40 cents from the New York close. Silver slid by just over 4%, a net decline of $1.18, taking the most active September contract to $27.20.5. The dollar continued to lose ground today, giving up 0.46%, taking the dollar index to 102.53. First, we did send out a trade alert prior to the New York Open. Gold was dropping, but it was our belief that it would be much shallower than what actually occurred. We sent out a trade alert to buy December gold at the market. Gold was trading at $2,460 with a tight stop at $2,455. That stop was executed a couple of minutes later when gold continued to drop, trading to a low this morning just above $2,400 per ounce. We sustained a loss of $500 per COMEX contract. On today's show, I want to take a much longer-term view of recent changes in gold price to put into perspective what we're witnessing now and whether or not we've seen any kind of major chart damage in today's severe price decline. This daily chart is highlighting the simple 50-day moving average going back a year ago. This, of course, is August of 2023. And between August and December, gold was, for the most part, trading above the 50-day moving average. It broke below it for a short period of time up until the middle of February, and that is when gold had its most dramatic price ascent from just under $2,100 per ounce to a new all-time record high and close back in the middle of April when gold breached $2,500. And it was after this first new all-time record close and high that things began to change, because rather than seeing gold trade tremendously higher with sustained rallies lasting multiple months, we would see gold trade from recent highs down to the support that comes in at $2,350 on 3 occasions. Now, I draw your attention to the 50-day moving average because my sense is that as long as gold remains above $2,420, which is the 61.8% retracement level of this short data set, as well as the simple 50-day moving average, that we, A, have not sustained any major technical chart damage, and B, and most importantly, are still witnessing gold trading in a short-term bullish demeanor, which is why my current assessment is that as long as December gold can effectively close above $2,420, it should at some point breach these recent highs that came in at $2,490 and challenge the all-time record high of $2,500. 538, resulting in a new all-time record close. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.